top pick number one, SVB Financial Group, SIVB on the NASDAQ. What do they do, David?
Okay, so my theme today is, if leadership in the market right now is technology, technology is disrupting all kinds of different industries. And I want to find the companies that are benefiting from the changes in technology, just in the obvious, not like semiconductors and software and so on, but who's using technology to their advantage. So this is a bit of a bend, but SIVB or SBB Financial is a regional bank in Silicon Valley Bancorp. Okay, this is a company that has been banking private equity guys, early stage tech investors, and early stage tech companies for about 15 years. And in doing so has built an incredible loyal following in the people creating wealth in the US. They take warrants and options in the companies that they finance. And they've grown their company. It's about a $14 billion market cap. They've grown their book value about 13% a year over the last 10 years. They've grown their book value by about 14% a year. They continue to grow their deposits. It's the fastest growing regional bank in the US. And as long as technology continues to develop new businesses and entrepreneurs, they are going to continue to prosper. So it's a very quickly growing financial services company.
Okay, an intriguing story that. iRhythm Technologies, not a huge company, involved in cardiac monitoring.
Right, so let's take technology into med tech, okay? iRhythm is a company that has created a device to monitor for atrial fibrillation. Okay. Now, the incumbent product that's used looks a bit like an old Walkman that people carry around, and it monitors their heart rate over a couple of weeks, and then a doctor looks at it on paper and says this is normal or it's not. iRhythm created a wireless patch that goes on the skin, is completely non-obtrusive, gets far better data, 50% better data. It is read by machine learning, big data, and so it is much more effective. It costs a little bit more, but they have only 5% of the market in the US. It is going to grow at 50% a year for years. They have zero business in Europe at this point, and nobody comes close to the technology. So this is a proven product in use that is improving health outcomes for people with atrial fibrillation.
So your choice is this brick that is a bit like a Walkman.
You choose.
Or a patch.
Right, $70 for the brick, $200 for the patch, but the patch goes on like you were trying to quit smoking.
That's amazing. And it gets monitored remotely.
Monitored, and the output is looked at through artificial intelligence. And the more people that wear these things, the more intelligence that they get, the outcomes get better and better. So nobody's catching up to them because nobody's got anything like it.
That's interesting.
So it's a billion-dollar company that probably grows at 50% a year for several years.
It's interesting. There's probably doctors who've made a good living specializing in reading those bits of paper, but they may be under pressure.
That's right.
Yeah, it's interesting how skilled industries, a lot of them are getting eroded.
Right.
Charles Schwab Corporation financial play.
Right, okay, so this is obviously, you know, I've said for some time we really quite like financial services. We like things related to capital markets. Schwab really is sort of the Amazon of financial services. They've used technology to their advantage to make their customer experience better. 40% of their revenues come from just net interest margins on deposits, which are growing. 40% are on asset management fees. They grew their new assets last year by 56%. Like, that's enormous. Their new asset growth was up 56% last year. New asset growth. So then if you took the new asset growth they got the year before, they got 50% more this year than they did last year. And if I think back of all the money that was made investing in asset managers and capital markets in the 80s and 90s, you know, this is the company that is dropping price but raising their earnings quite nicely while they're dropping price.
I've heard it said, I think it's about E-Trade, that because their customers hold huge cash balances, higher rates can be good. Would you earn more?
Absolutely. 40% of their earnings come from money earned off their customer deposits.
It's interesting how the customers are leaving money on the table, but they just think.
But they're happy to be there because they get cheap trades, and they pay low fees on their ETFs that they buy.
That's fascinating.
Yeah.
Blockbuster was reputed in the old days to earn a lot of its money on late fees.
Yeah, I think that's right. And I think probably Starbucks makes lots of money on the cash that's left sitting on all those cards and in people's devices as balances.
Interesting.
So it's very interesting. So all of these top picks are companies that are disrupting their industries using technology to their advantage.
David, thanks very much. You tied it all together for us at the end. David Burrows was our guest on Market Call. Thanks very much for watching. The Encore airs Monday through Friday at 10 p.m. Eastern, 7 o'clock Pacific. And then, of course, there's Market Call tonight, Monday through Friday at 5:30 p.m. Eastern. Thanks very much for watching. We'll be back tomorrow.